Hello and welcome back to the Growth Junction, the podcast where we dive deep into the world of Bitcoin finance, crypto, and we are speaking to industry leaders who are shaping the future of this space. I'm Dennis. I've been through 2.5 crypto cycles myself, seeing the highs and lows in my wallets. And before this, I used to work for multiple marketing companies, one of them being a top Web3 crypto agency. Today, I am joined by Mike Diedrichs, who is at the forefront of crypto and CRO at Bosonic, who have a very interesting tech that can protect traders from losing everything when hacks such as the ones on BYBIT and FTX happen. Mike, welcome to the show. Please introduce yourself.
Yeah, thank you, Dennis. Great to be here, and I appreciate it. I'm Mike Diedrichs. I am the Chief Revenue Officer at Bosonic Inc. And Bosonic Inc. is a financial market infrastructure company that's focused on eliminating counterparty clearing and settlement risk. And we offer a comprehensive platform for trading, also a credit solution. And we also have a subsidiary, Bosonic Securities, which is an SEC registered broker dealer, and we have an alternative trading system that we trade equity, debt, and digital asset securities. You've been through a couple of cycles. I've been in this space about 7 years. I came from the TradFi space within structured credit commodities, kind of helping structure those in terms of trading platforms and coming up with some bespoke products. And kind of came into this space really curious about how this technology can really enable financial services trading and brokering in a much more efficient way, taking away some more of the legacy system inefficiencies and really utilizing this new technology with old school best practices. So I'm excited to be here with you.
Awesome. Thank you so much. So I have two main questions that I want to cover. I'm really excited about this Bosonic tech and specifically how the mirroring works of the assets and
Sure.
how it protects the traders from BYBIT and FTX hacks. Yeah, how's Bosonic tackling that?
Yeah, so I mean, I think that the collapse we saw with FTX really sort of like exposed the deep flaws of centralized crypto platforms in terms of exchange risk, misappropriation of funds, lack of transparency. But I also think that what it really did was really just reinforce what investors are always looking for. And they're looking for, security, transparency, regulatory compliance. And Sonic as a firm, when we've existed for 9 years, we're revolutionizing the space with a new platform that we're launching here next month. Really, where it talks about how we actually can enhance the security in terms of how the custody of the assets stays within the custodian, and then how we bring those assets onto our private permission layer 2 network. And keeping the assets on the custodial level eliminates the risk of sort of the exchange risk of misappropriation of funds or an exchange failure. And the way we do it is that we have several qualified custodians that are integrated into our network. We also have something we call Smart Vault, which is actually a proprietary system where we actually have Web3 wallets that connect in via we do our own KYC AML via smart contract, then obviously be able to bring assets onto our platform. And what this does is basically it protects the layer. We basically the assets stay within the wallet, self-custody level, or within the custodial level. And when the user would like to bring those assets onto our platform, they actually put those assets basically in a separate account where that gets frozen. And then we mirror those assets onto our platform and give them instant credit on our platform. So then we have that programmatically and cryptographically proven on our layer 2 network. And so in that essence, the assets never left the custodian. We just now have what we call a mirrored asset or a tokenized asset really on our platform that gives them instant credit to be able to trade on our platform. And we do atomic settlement, instant trading. So it's very capital efficient and secure.
And you mentioned in our first call that this actually protected people on FTX when that all happened.
Correct.
Mm,
We are one of the few, if not the only platform that actually was able to trade until the FTX actually pulled their APIs and closed down on bankruptcy day. And it said we didn't have one
mhm.
broken trade. And that model worked. We had a single custodian at the time, and that really kind of brought it to the forefront of we need to expand this into having multiple custodians and bring this into so you actually have more access points. And then what we do is we're able to, when we settle at the end of the day, we're able to bring back and settle across all the custodians. So our goal really is to provide a platform where traders have mass liquidity. They can get liquid from many different sources, do it in a safe, secure manner, in a capital efficient way. And then
Yeah,
you can actually cross settle and net settle with multiple custodians, which brings us it's a security layer. And obviously it's also a huge capital efficiency layer.
very, very cool. Thank you so much for that. So my next question is, what's keeping TradFi businesses, like where you come from, away from, or was keeping them from jumping into blockchain? And is it the tech or the old school nerves, and how is Bosonic breaking down the wall, so to speak?
No, it's a great question. It's so I come from the TradFi space. Our CEO, Rosario Gargiola, he also comes from TradFi space, and understanding the best practices within TradFi and understanding sort of the risks and the apprehension that exists within TradFi. And we're trying to break down those walls. And I think that there's just, there's a capital sort of investment in these legacy systems that exists. And I think there's an apprehension in terms of throwing that technology away, jumping into new technology. And so the education is still there. It's ongoing. I think we're trying to create something that is very simple. It does not eliminate the existing legacy systems, but actually we can enhance the existing legacy systems by tying into our network. So it's actually you. I think that's something that traditional financial firms are looking for. They would like to find a capital efficient way to enter into this market to get access to these assets and also understand the benefits. It's, we look at some trading an on-chain asset versus an analog asset. There's a lot of different in terms of speed, transactions, settlement. We can do near instant settlement. They've come down to T+1, which is still a very capital inefficient way, I believe. I think there's a lot of
Hmm.
capital is being sort of just held or frozen overnight for 24 hours, where that capital can actually be utilized to gain more exposure and gain more revenue. And so I think that it's understanding the nuances of the new technology and also understanding where we're seeing a lot of this news about the security risk, all the different hacks and whatnot, the attack vectors that exist. We're trying to eliminate those as much as we can to prove to risk managers, to
Hmm.
the IT department, standing from a technology standpoint, but also from the traders, the actual efficiency of how you can trade and how on-chain trading and tokenization in terms of how you actually can bring assets on-chain can really benefit traders in terms of usability, accessibility, and costs.
Yeah.
I think that's an ongoing process, but we're getting there. And I think
Hmm.
the last 18 months that we've seen a huge change. And I think it will change even more so as the new administration has more sort of open
Yeah.
regulations. We've seen micro regulation in Europe has been transformative, and also what the VAR is doing in the Middle East. So there's a lot of positive movements from a regulatory standpoint, also sort of from educational standpoint within TradFi to get into this space.
Yeah, definitely. I think the technology cannot be held back in the end
Absolutely
anyway.
not.
Yeah, yeah. So who is your like typical client? Who do you work with? Is it more of a bigger institutions or traders and
So our platform is an institutional focused platform. We are
Mhm.
expanding into the retail sector as well. We see that just from our background, we're from an institutional background. We do see the immediate need where firms that are looking to work in a very safe, secure manner and they're looking to get the ability to buy, hold, and trade assets, and also to be able to gain the access of utilizing these assets collateral within our credit solution. We have a short-term repo, and we also have something called cash out borrow, which is almost like a term repo, which is a longer dated lending, which you do 1 month to 1 year. And the need for firms to maximize their corporate treasury in terms of being able to lend out idle, could be fiat currency, it could be assets. These are things that we are focused on and we're solving. I think that's the sort of the high value target and needs. But also from a retail standpoint, we are offering now soon some very interesting products that will really give access to the unique assets to retail clients that they may not have access to before. And I think that's where tokenization comes in, where you can really democratize access to a lot of different assets, being it fractional equities, being tokenized T-bills at a much lower level than right now you see with some of the competitors like BITL. These are very institutionally focused products with $5 million minimum investment. We're going to bring that down to a level where the retail investor can utilize that. It can actually get yield and then get additional yield through our credit solution. So it's an interesting thing. So we have a very wide spectrum of targets. But I think right now in the short term, we're really focusing on liquidity providers, market makers, exchanges, custodians, and asset managers to really bolster and bring up the liquidity. And then we'll have a secondary phase where we start bringing in some retail-focused clients.
Yeah. Makes sense. So you briefly touched on it on a competitor, but what does the competitive landscape look like for you? Are there similar providers?
Yeah, there are a few, and I think that we have a very unique model and network, and the fact that we have through our subsidiary Bosonic Securities, we have a SEC registered broker dealer and alternative trading system, which is there's only about a handful of those that exist in the U.S. There are several competitors that are doing similar things with the off-exchange settlement and whatnot. And obviously, there's some lending protocols, and they're out there from the credit solution side. But I think our goal is to really offer a holistic platform where you can go and actually, like I mentioned earlier, buy and sell crypto assets. You can utilize those in the credit solution, but also have access to digital asset securities. So we feel like we're pretty much in a very unique position the way we offer ourselves. But again, I think that the off-exchange settlement and just the need for a sort of better, more secure and capital efficient platforms is growing. So I think we are seeing a lot of interest, but this is something we've been working on for quite a long time. This is not an easy undertaking, building this, refining this, and getting this done. For me, from the revenue side, I'm salivating and kind of taking this to market and really bringing in the revenue. We're talking some really, really interesting clients and partners. But I also understand the heavy lift on our dev side to make this work. Because I think it's critically important when you're talking to institutional clients and you have the complexities that we offer to be able to execute and do this properly. And we have an excellent team that does that. But I think that also, due to the complexities and sort of the broad reach of our market, it's hard for competitors to kind of exist to get those type of licenses and build that technology. So we're sort of in a small niche space from a competitor standpoint.
Yeah. Awesome. So you kind of touched on this already as well, a little bit, but the goals, Bosonic goals for, like, let's say for 12 months and then 36 months.
Sure. Yeah. So really, we have now tied together. We are in beta testing for some of our features where we have clients that are right now trading with us. Our goal here in the next 6 months is really to scale this business. Really to me, I look at our pipeline and it's amazing to see the interest that we've generated. And really now we're expanding. We're getting partners in Asia, in Europe, the Middle East. So those really, besides US, are the geographical areas that we're focusing on. Where obviously we come from a heavy regulated world, so we do the old crawl, walk, run. We were doing very things every step by the way to follow, be compliant, and that takes a long time. So the next 6 months is really about us launching and scaling this, and we like to see about 6 to 8 products on our ATS. that are listed, and then really grow our credit solution. We already have a tremendous amount of sort of both from miners, from asset managers, from funds, and traditional and banks and neobanks that are looking to utilize that. I think that we're trying to now really just validate the platform with all its features in the next 6 months. And in 12 months, we'll be heavily integrated into multiple exchanges and accessing a large amount of retail investors that will then be able to scale our ATS quite a bit and really
Yeah.
bring in sort of a different flow into our credit solution. It might be smaller lenders, but it'd be the volume and the number of loans will increase drastically. And then we're excited about it. If we're talking about over a year out, I think there's a tremendous amount of assets that'll be moving on chain. I think we're seeing that the rhetoric around the whole entire market is this is where everything is going on chain. So, I come from the structured credit world where I think there's a tremendous amount of different assets that can be brought on chain. But I think that as I look at the tokenization world, back in 2017, this was sort of a pie in the sky thought. People talked about its benefits, but it never caught traction. It was very fragmented. We're trying to bring that into a less fragmented sort of network where we have a wide variety of assets. We talk about equity, debt, talking about structured credit, carbon credits, different types of interesting and real world assets that kind of gives investors a wide spectrum of assets instead of trying to find the niche. Sort of there's platforms out there that do, tokenized equities and tokenized debt and tokenized carbon credits. Each one of those platforms have limited volume due to its sort of niche and fragmentation. We're trying to bring that together. So a long-term plan is really to bring a wide variety of assets on our platform with a wide spectrum, both institutional and retail focused clients. And we think that could really scale very quickly. And we're doing that by having great partners and whatnot. We realize we cannot do all this ourselves. We know our sweet spot. We know our strengths. So we're excited about several different exciting partnerships that we'll be launching here. But that's sort of our long-term goal. We're ambitious, but I think we'll get there.
Yeah, awesome. So considering these goals, long-term goals, if you had a magic wand, what's like one thing you would solve right now for the business?
One thing I would solve it's I do think that it's giving there's a whole host of different yield bearing products. There's within all different loan portfolios that are fairly complex. There's I think that if you look at from a credit standpoint, and from a loan standpoint, there's a huge amount of growth. If you look at what happened in 2007, 2008 in the credit crisis, the market took a tumble due to liquidity issues, due to understanding the value of assets, and obviously counterparty credit. And I think that now we're start seeing again recently here, it's that market in the traditional world is exploding again. You have a lot of different basket of interesting credit products that are now kind of, I would say, maybe inflating that market quite a bit. Where you have some of these credit default swaps that are now, there's sort of a synthetic volume that's going through in terms of the underlying asset. I think being able to bring those type of assets and that market into our world and the tokenization world and our ATS, where we basically we're eliminating the counterparty risk, we're eliminating the credit risk, right? And we can then, because everything in our market and our platform is fully funded, it's that to me would be the holy grail of us being able to expand into a massive TradFi market. And that super complex, super exciting. But I think if I have a magic wand, I can fix that, and not fix it, but transform that into being a on-chain sort of market where we can tokenize that and really do that. I think that could be the hyper explosion.
Okay, cool. I really hope that happens for you guys.
No, it'd be exciting, and I think I think everybody I talk to, sort of in the business, that in the traditional capital world, and certainly in structured credit, they are not as sort of excited about tokenization until they start realizing the nuances and the benefits of it. And I think that that's part of the education part I talked to earlier, right? I'm talking to a lot of them about how this can be done, and there's a lot of ways that those products are traded in terms of there's voice brokering, OTC. There's obviously people trade this via various trading platforms, by reverse auctions. There's a lot of ways that you can kind of do this and automate that on our platform. And I think that's where the light goes off and they say, this could be really interesting if we can bring it to that next level. But the problem always going to be is when you tokenize something that's already existing and you have an on-chain and analog asset with the same underlying trade, it could be a sort of call it an arb in terms of price differential that can happen. And I think that's where people are a little bit nervous. So I think that migration from a sort of the structured credit side to a tokenized world would need to be the new assets that are tokenized, not existing assets. So I think that's sort of going to be the slow path, but it'd be interesting.
Yeah, cool. What would be the implications of not solving that with your magic wand?
Yeah, I mean it's a good question. I think that if that doesn't happen, if we can't get that to really work, I think that for us, I think that market is always going to be a very large market in the traditional sense. For us, I think that what I think is one of the other things, if we can't do something like that, I do think that there's a syndicated loan market that is a very, very interesting market that to me is led by very, very large banks right now. And being able to bring that into the sort of the on-chain world where it's structured by smart contracts that are set by a sort of a standardized contract where we move the power or the leverage down to more mid-sized banks where they don't have to go by the terms of the large sort of the lead syndicate. It's something that a lot of people have been working on. I think that it's some really interesting things. It's a huge market. It's also extremely inefficient market in terms of if you're a smaller bank. It's really leveraged against the large banks that they can dictate the rules and the parameters. And I think that could be another one. If we can't get the structured credit market, I think the syndicated loan market will be something that I think that could be alternative to kind of fix.
Yeah. Awesome. So last question. Is there a Bosonic token people can buy?
No, there's not. No. That's something that we do not have right now. For us, I mean, plenty of tokens out there already. But right now we don't have that, and there's no plan for doing that right now. But it's
okay.
I know that there's several platforms that find benefit in doing that, but for our platform, we want to be we're a technology provider. We don't want to be issuing tokens or doing like that. We don't handle cash. Like for us, it's better to kind of stay out of that game.
Yeah. There comes a lot of skepticism when launching your own tokens as well.
Exactly.
And more credibility doing it without. I mean, just focusing on bringing the value instead.
Yeah, there's some complexities, and I think that, and we're in a very regulated environment, right? We're having the broker dealer license and having this. I do think that it's a problem where you kind of start trying to do too many things with some of these tokens, and you try to dive into that side where regulators will start speculating or start looking in and really kind of not be very happy about it. I feel like we want to stay out of that. That's not really a value play for us, and I don't really see a benefit for us. So we're staying out of that game.
Awesome. I respect this a lot. Tell people where they can find out about you and Bosonic.
Yeah, sure. We're at Bosonic.digital is our website. You'll find lots of information there. We're just revamping our website, but we're happy here. You can schedule a demo, come in. We'd love to sit down and really talk about how we can help various businesses. I think that we've had an amazing sort of response and positive kind of feedback from all our clients that we're excited to take this to market. We'll be announcing several very interesting partnerships here in the next few weeks. So please stay tuned and yeah, check us out on LinkedIn as well. We're there. And yeah, love to connect. And if anybody has any questions or anything, please find me on LinkedIn and I'm happy to connect and talk about crypto or just talk about Bosonic.
Yeah, awesome. All right, that was a really insightful conversation with Mike Diedrichs. Huge thanks to him for sharing expertise, and I hope you enjoyed this episode. If you, if you don't mind, subscribe, leave a review, and share it with anyone who's deep into the crypto space. Mike, thanks again, and it was a
Thank you, Dennis.
big pleasure
I
having you.
appreciate it. Great
Yeah.
time.
Any last words?
No, let's just hope that we get a bounce back, get this Bitcoin over 100 grand again.
Yeah, for sure. We're rooting for Bitcoin. Yeah,
All right.
I'll see you guys in the next episode. Stay curious and keep building.
All right.
Bye
Thanks,
for
Dennis.
now.